market didn't quite respond the way we were expecting it to do today, following the worst day ever since June 2020. I mean, yesterday it was a bloodbath. The Dow Jones shredding, pretty much wiping out 1,300 points. Nasdaq more than 4%. Everything except just one sector, except just one asset, and that was oil. And we covered that yesterday when we did a market update. And today, it was kind of the same thing, because if it wasn't for the energy stocks, the market would have also ended up in the red. And there is something behind this move that's going to actually last and push this sector to make it very viable right now, as we're seeing some of the analysts and the big banks starting to push this and requesting the clients to start putting money into these stocks. And I also want you to position yourself now, because if you do, then you'll be able to make a lot more money as we get into the end of this year, but even more money as we get into 2023. So the news that broke out today in confirming this move is oil prices are settling higher based on talk on the SPR refill. So SPR, what is it? The SPR is the Sovereign Petroleum Reserve, all right? It's kind of the emergency fund for the nation in the US, in order to make sure that, they have somehow that, reserve in place. If something happens, then they can use it smartly and wisely, all right? Think of it as, really an emergency fund. You use the emergency fund for an emergency. And whenever the emergency has been covered, then you need to replenish that emergency fund. That's how it works. So the U.S. is by law should have, a petroleum reserve, oil reserve. That's what this current administration did when price went to $130 a barrel back in June, in order to fuel the market with supply. It worked somehow, not, it worked a lot, not just a little bit. It worked, but now these reserves are empty and it's time to refill them. So we got a news yesterday and even this morning, confirmation that the current administration may consider refilling the U.S. oil reserve at $80 a barrel, and on a weekly decline of supply and inventory posted an increase. So what exactly does this mean? It means that this administration is now seeking to replenish those reserves, but they're looking to do that once oil start at $80 a barrel. Now, the thing is, since June, oil has been dropping significantly, and 80 might not even be a possibility to hit unless something dramatic happens, or if this current administration continue to do something, behind the scenes to push it to 80. All right. But the thing is, you've been selling it around what, maybe 90, 95 or even 100. And then you want to buy it back at 80. So of course it does make sense. But the thing is, the market is always trying to, think forward. So look, if on the news of this, oil gained 3% at some point. Today, it was already around 90. Do you really think it will be able to hit 80? So I think the market can start positioning itself now so that people will start buying cheaper, because they know we're going to have millions and millions and millions of barrels to be bought. And unfortunately, the current administration might not be able to buy that in at 80 as they are willing to. But the thing is, at some point, it has to happen. So they better get in sooner rather than later if they still want to have a price that is closer to their target. Otherwise, they're going to buy it at whatever the price will be, and it's going to be a little bit higher than this. Now, how can you benefit from this as an investor? Well, first off, if you've been following my channel here, you know that energy is really my conviction sector. It's my conviction kind of, go-to sector since the beginning of 2020, when this whole thing started with COVID. Why? Simply because despite whatever you are hearing on TV and on, mainstream media and on the stock market with EV plays and EV chargers, oil is the number one commodity which we cannot just live without. I don't care if you're in the US, in Indonesia, in Africa, in Europe, you need oil. Not only to fuel your car, but to heat yourself, but to do pretty much everything, all right? And based on that, I don't think we can see oil disappearing just tomorrow. Now, On the news that we just, went over, it means that it is bullish for oil. So oil is going to start going back up. Maybe not to, crazy amounts, but it starts going back up. And it means that people can now feel more comfortable buying energy stocks, which are right now really undervalued once more. It wasn't the case 2 months ago, but it is the case now. And that's why I think right now is a good time for you to buy. So which am I recommending? Personally, I am in some ETFs and I am in the small caps. That is where I see the most gains, when you look at the risk and the reward. So not your Chevron, not your, Exxon, because those are first expensive in terms of price, but also I don't see the upside as big and huge as compared to the small caps. Your small caps are the companies that you don't even know are existing. So I can recommend you, dozens of stocks. APA is one of them, Apache. CPE is Callon Petroleum. PR, Permanent Resource Development, is another one. SM Energy, Schlumberger, SLB, ticker symbol SLB. MRO. Those are really good companies, quality companies you can invest in. And the good thing about our companies is not only they are buying back their shares, meaning, you have the ability to have that, price action kind of support, but you also have huge dividend that already started, but are going to continue to grow up until 2023 and even beyond that. Just to give you an example, DVN, Devon Energy. This is a stock that is paying me $700 every month, and it started at $200 just 1 year ago, and it's going to continue to grow. So to almost $1,000 every month, just because I'm holding the stock throughout the ups and the downs. That alone is a major gain for me, because that is real true passive income. I don't have to do anything, but every month, boom, $1,000 on my account every time without me doing anything. That is the true definition of passive income. So that is the way to go, small cap, but you also can buy the ETFs, XLE. XLE is the energy S&P 500 ETF just for energy. You can have also some from, Vanguard. You can also have the USO, which is an oil ETF. You can have, a triple leverage ETF into oil, meaning that whenever oil gains $1, you are gaining $3 off of it just because you leverage it, 3 times. But you also have to be mindful of the losses in case, it drops. So this will be the way to go in order to benefit from this. And let me know if you are already involved into some of these stocks, or if you are even planning on doing so.